Good morning.
Good morning.
Good morning.
Cheers.
I've got my coffee. You've been up since 4:45 and tell everyone what you have been partaking in.
I have been walking, going on 2 to 3 miles walks with my neighbor. Take the dogs. Our husbands are home with the kids, so we get up early, we get it done just to
Love it.
start our day fresh. And my alarm went off at 4:45. We were walking by 5.
Wild.
I've had a Celsius, I've had coffee, so it was time to like mix it up with
Yeah.
not just having a constant IV of caffeine this morning.
Oh my gosh. Good times. Danae
Yeah.
and I are very opposite. She's an early bird and I'm a night owl. So
The years of competitive figure skating that required me to get up early.
that's true. Yeah.
Yeah.
Yeah. Okay. Well, let's talk about a little market update. We're going to keep this short and sweet. We're going to show you things, so it should be pretty engaging. Danae, you have a lot to share because, well, with the government shutdown, everyone's question is like, okay, our mortgage is just not happening anymore, which is not true. So why don't you share what's going on?
So it is October 7th when we're recording this, and I think we're releasing pretty quick after.
Yep.
Um, so the government has been shut down for 7 days. Um, there's a lot of impact on a lot of different things, but in regards to mortgages, there's really not a whole lot. Um, the Federal Reserve cannot shut down, so money can is still being transferred. Um, for counties, that's county government, not federal government, so things can still be recorded.
Okay.
In
Recorded
regard,
meaning like transactions, like closings are still
yeah,
happening,
yeah,
exchanges. So
closings are
money
still
is still moving.
happening. Recordings are still happening with the county of movement of all of that.
Mhm.
Um, And so in regards to like a conventional loan, there should be no impact. The only people that would be impacted by a conventional loan would be those who are federally employed and that don't currently have a job. So, because they'd be on furlough, there's a little bit more ins and outs of that. Whether it's because they don't have a paycheck right now or because we can't get a verification of income.
Makes sense.
Um, and everything that I'm talking about is all going to be specific to my bank. I can't speak for each bank runs a little bit differently. So I don't know if it's different somewhere else, but in regards to my bank of American Pacific Mortgage, um, we have suspended the need for tax transcripts.
Mhm.
So that can kind of help push things through and minimize the impact on those conventional loans.
Got it.
We have government-backed loans such as VA, USDA, and FHA. VA is not going to be affected at all, again, unless you're a federal employee, and that's, part of the employment verification. Um, but we self-insure those VA loans, so there won't be any impact on funding those.
Perfect.
FHA, if you are already in the process, those won't be impacted.
Perfect.
Um, any delays are going to be on the back end, but not going to actually affect the borrower. Um, those, however, if it's a new loan and you need an FHA case number, you may not be able to get that because that's a part of the federal government of how to obtain those in the process of that. So that could cause delays.
Got it.
And really that just impacts the appraisal.
Mm.
So for any agents or buyers that are like, how do I strategize? You could still move forward. You could still get underwriting approval. You just have to wait to get that appraisal ordered.
Got it.
Uh, USDA in this area of, greater Seattle area, we don't really see them that much
I've
because
done one in my 11-year career
I've
and
had two.
way up in Arlington.
Yeah, I honestly love these loans. I think that they are
Agree.
great zero down loans. They're just hard to qualify between the location and they have a really, really strict debt to income ratio.
Mhm.
So between the strict debt to income ratio and the cap on income, most of the time those don't line up because our housing are so expensive. That you can't qualify for the housing in the area unless you're above that threshold.
Yeah, the
Um,
other thing I mean, this was like 8 years ago that my clients did a USDA loan. I remember we had to do like a 2 month closing
yeah, yeah.
because it was so long to get approval for their loan from
And
USDA.
so part of that with the USDA process is the bank will do their internal underwrite and then it's sent to USDA for their own underwrite.
Yep.
And so that's where USDAs are going to be really impacted because that whole sector of
Yeah,
the government underwrite is not open right now. So USDAs will be greatly impacted.
sure.
Um, so all in all, minimal impact, which is great.
Mhm.
People can kind of function accordingly and hopefully they get it figured out soon.
Yeah, definitely. As far as obviously the Fed met last month and
Yep.
we saw rates trend very nicely downward, but it was before the meeting, which was is always interesting. What's the deal with the Fed's meeting again? Give us the download on that.
Yeah. So whenever the Feds and their rate cuts and everything gets talked about, I always have to start with a yell from the top of the mountain. The Federal Reserve rate is the overnight lending rate. So it does not directly impact mortgage rates. The sentiment on what the Federal Reserve is doing with their interest rate does. But that's a bigger economic picture.
Right.
So the Federal Reserve rates will affect your credit card. It will affect your savings account, interest rate. It would affect your HELOC if you have an adjustable rate on the HELOC because it affects prime rate. But in regards to a 30-year mortgage-backed security, it doesn't impact it. The sentiment on what the economy is doing does. So in regards to inflation and jobs and recession and all of that, investors are deciding where to put their money and where they feel like it's most secure.
I was going to share real quick just this quick graphic so people can see what
Yep.
exactly happened right before. So the meeting was September 16th, and you can see that rates just went woo right
So
before
if you
the
can
meeting.
push this date back from October 7th to like July 16th,
Yeah.
2020.
July 16th, right
So
there.
top where it says October 7th
Yep.
and put in July 16th.
Oh, okay.
So on July 16th, 2024,
Oh, 2024.
the national average of rates were at about 6.8%. And this is right about where the sentiment that the Federal Reserve was going to do their first cut, which they ended up doing 50 basis points,
Mhm.
was starting to be talked about.
Right.
You can see if you go 2 months to about September 16th, you're all the way down to about 6.1% for the national average rate.
Yep.
That's in 2 months. That is the sentiment of what they were going to rate cut. And so the market is factoring in these rate cuts before it actually happens. And then you can see right after it starts to go up slowly. And then within a month later, they were at October 16th, they were at 6.68%. And then they continued up even more.
Right.
And so if you go back to September 2025, you'll see the same, which is still on this chart. You'll see the same thing, not as dramatic.
Right.
You'll see it come down beginning of September, and then you'll see it go up right after. I had someone say an analogy of like Apple stock.
Mm,
When the new iPhone is getting released, people are so excited about it.
right.
They're investing in Apple because they're so pumped of this awesome new iPhone that's coming out. And then it gets released and it's kind of like,
Eh,
okay.
yeah.
So then their stock dips a little bit because it didn't exceed expectation. It just even if it just met expectations. So it's kind of the same thing. Um, Now we're not, we've seen rates tick up slightly after, which we would totally expect to be normal. And we are expecting two more rate cuts, both at the November and December meeting.
Mhm.
Um, we are not expecting rates to skyrocket like they did last year. Now nothing's guaranteed. And if I've learned anything the last few years, it's that I don't try and make predictions. But we're in a different market. We
Yep.
are in inflation, I feel like is a little bit more predictable.
Right.
And jobs are hurting.
Mm,
People are getting laid off. Unemployment's increasing. People are taking longer to find jobs. And while for the economy, that's not ideal. Like we don't want to hear people losing jobs. I secretly get a little bit excited because it helps mortgage rates.
mm,
Because it's leading to a recession. It's showing pain in the market, in the economy, and the housing market is what stimulates the economy.
mhm.
So we're not expecting a skyrocket. Whether we see a big drop, I think leading up into the September meeting, I think we saw a lot of the three rate cuts through the end of the year get factored in. I don't really anticipate huge movements. I am hopeful that we continue to see a downward trend.
Sure.
But it's going to be up and down. It's not going to be linear. And I'm hopeful that it's a different economy or a different market and that nothing unpredictable comes our way.
Yeah, that would be nice, wouldn't it?
Um, on your side of it,
Sure.
give us some stats out there. I know I've had two
Yeah.
buyers, one that got like 6% seller credit in the negotiation of a condo. One that the sellers were at their rock bottom. They tried to negotiate, but the sellers were just like, I cannot go any lower. And and so what are the stats on housing?
Yeah, so right now, so I had two closings last month in September. One, the seller, it was very similar to what you said about that seller. Like they were at their bottom and the buyers were trying to squeeze more. And I was like, literally, guys, there's nothing else to give here. Sellers were in a desperate situation. And so thankfully, we were able to protect a good chunk of their equity at closing to help them transition into the next like part of where they are wanting to go with their family. So that was amazing. The other was a buyer, and I was able to negotiate a 3% credit for them. So that's a lot of money. I mean, we're talking, on an $850,000 purchase price, we're talking, $25,000. That is a lot of money to be able to buy down the interest rate, pay most of your closing costs, that sort of thing. So I'm,
Did those 3% credit for?
say that again.
What did the buyers use that 3% credit for? Do you know?
They used it for a 2-1 buy down and then paid for their closing costs. So, yeah, that was really amazing. And actually, if I think about it, all all of my buyers this year have gotten crazy closing costs assistance or like the ability to do a 2-1 buy down, which has been amazing. So 2% off year one, 1% off year two, years 3 through 30, you're at whatever the rate was at the time that you locked. So that's been really cool. Whether or not we are going to see like come January quarter one, things get a little crazy in the market with buyers, I don't know. What I can tell you is I'm talking to a lot of sellers. I'm very seller heavy right now. And the buyers that I have been talking to are waiting till quarter one. So I think a lot of that has to do just with the holidays are coming up. The weather has been so nice. Like, what has this summer and early fall been? It's been amazing. So I think I would encourage you, if you're a buyer, right now is the sweet spot. I tell my buyers that talk to me that are like, okay, how do I time the market? You can't time the market. If it's the right time for you, it's the right time for you. And then we're here to support you. If you're trying to capitalize on a deal with the seller, I would say right now through Christmas is the sweet spot. Once we get into January, historically in our area, the frenzy starts again.
When are your sellers like on average, when are your sellers thinking or like shooting to list?
So it's interesting. I have three of my four sellers are waiting on jobs.
Oh, okay.
So yeah, they're moving out of the area. So that's been really interesting is having a lot more people not necessarily relocating to the area, but they're actually like, hey, this area isn't for us, or they want to be closer to family in a different state or in a different country. So that's been really interesting, is like they're just waiting on jobs. And then once they've got the job secured, then they're going to pull the trigger on listing the house. The other one
It could
is,
be anywhere from the next month to,
yeah, I mean, like I could literally get like a phone call right after we get off here, like, hey, we're ready to go. And
but I
then
think where my like question was leading towards is the people who are listing now are needing to sell.
correct. Yes.
They're going to be willing to negotiate because
Right.
they they don't want they want no one's wanting to move right during the holidays.
No, absolutely not.
You know, so
Yeah,
it's something in there. So
right.
as a buyer coming into the market, that kind of gives you an upper hand.
Absolutely. Yeah, yeah. It's not like the most ideal time to list right now. Like I would say if a seller wants to list, I would avoid probably the week prior to Thanksgiving and just wait until January, the first week of January. I mean, if you have to, like I get it, and of course I'll support you. But I mean, right now, October 7th through middle of November, I'd say these are like the last weeks of 2025 to put your house on the market. Otherwise, just wait.
Yep.
There's no point. Um, yeah, and then like the other seller that I've been talking to, they actually purchased a home with me back in 2020 and they turned it into a rental. And so they had just signed a new tenant. So with all the tenant laws and whatnot, it's just like right now the timing isn't right. But they're just kind of, they're like, we're done being landlords. Like it's time to liquidate. So just lots of people just kind of restructuring, whether it be where they want to live or like restructuring their finances. So that's been interesting.
I think that's such an interesting point of also the sentiment of the market and the economy is I know my mother-in-law lives over outside of Leavenworth, so a very second home dominant. And then my parents are on a lake
Mhm.
and again, very second home dominant. And both of those locations, myself and my husband have never seen so many listings out on those two. So people are trying to liquidate, whether it's preemptively, whether they have to, but they're getting rid of those additional homes
Yep.
to to protect themselves.
Yeah, and I mean, I can speak to that myself. Like we sold our Leavenworth cabin that we absolutely loved earlier in February this year because it was just like, you know what? Like things are not as booming as they were. The smart thing to do is to liquidate, and we got really, really blessed with the buyer that we found. And same thing with our beach house. We sold our beach house. I think it was like a week after that. And it was just like reallocating things and just kind of going, like the short-term rental market is not what it used to be. The smart thing to do is to, put our big girl pants on and do the right thing. So I can definitely speak to that.
And that's not a bad thing.
No, it's
That's
not a fail. It's recognizing what's best for your family.
yeah, and there's um you know, one of my buyers right now is she's buying a new condo in Issaquah and already has a condo in Renton, and she's ultimately going to sell it. And I think you have to look at the pluses and minuses of the finance, and you also have to look at the emotional side of it, and the long term. And she asked me, she was like, Danae, is this a good financial decision? Like, and I said, honestly, short term, probably not. Because when you bought the rent and condo, it was as things were getting to the peak, not fully there, but you may not make out as well as you wanted to, but she has a lot of personal stuff going on that she needed to get out of that because of emotional reasons.
Sure.
And having a condo in Issaquah in the long term is going to be more valuable.
Oh, absolutely. Yeah.
She can rent it if down the line she buys a single family home, or having that is going to be a better. So I was like, right now, right in this instance, probably not.
Yep.
But long term, that's going to be the more financial beneficial situation. And that goes the same for like whether you do something like a move or you just sell. You have to look at, okay, right now, yeah, I may lose out on the equity that could be gained in 10 years. But if I liquidate that, I can make sure I make all my payments and
Right.
don't, foreclose or, ruin my credit, which will have a long-term impact. So there's so many, and your mental health. The mental health of I've got overloaded with credit card debt.
Mm.
Okay, so if you sell, you can pay that off. If you are way overloaded and you can refinance and consolidate that, then you can maybe cash flow. So there's so many ways. That's why real estate builds generational wealth, because people can use their equity to put them into better positions. And
Right.
it's all a matter of what you're doing with it and how you do it. And there's so many different ways to do that.
Absolutely. Yeah. I wanted to share because we wanted to keep this a little under 30 minutes, right? So I wanted to share real quick what like stat wise in Snohomish County and King County, and I'll kind of do like rapid fire, show a little bit of graphs, but for the most part, prices are holding pretty steady. You can see my screen, right, Danae? Perfect. So this is Snohomish County, and I'm just doing all property types previously owned, not doing new construction. And so the average sales price for Snohomish County as of September 2025 is about 780, which has stayed pretty stable for the most part, as you can see, since about the middle of 2024. If we look at new listings on the market, we did see a big uptick in the amount of homes on the market back in May. So a high of 1,400 homes for sale. It's dropped down a little bit in August. We've got a little bit of an uptick for September. But definitely way more homes for sale than back in December. It'll be interesting. I'm not like for certain we're going to see like this big of a drop in December, like we did last year and like even the year before. So it'll be interesting to see like the trend for that because I've been having more conversations with sellers that are like, the time is right now, or, I need to sell, or I need to, go be with my family. So it'll be interesting to see what the stats look like for the end of the year. And then if we look at, what's currently on the market right now, currently in Snohomish County, we have 1,800 homes for sale. And that's stayed pretty stable since the start of summer. Last December, we only had about 600-ish homes for sale. So big uptick in the amount of homes for sale. So buyers, hi, you have more choices.
Negotiating power.
Yes, which is amazing. And then another interesting stat that I like to look at is like month supply closed. So right now, on average, it's taking about a little under 3 months for a home once it goes on the market to find its buyer and close. So that that so that is still considered a seller's market.
But that is a huge change from the average of what was it
Well,
in.
I mean, beginning of 2022, so rates started to really uptick in like April of 2022. We were at, what is point two of a month? What is that? Like 6 days?
Yeah.
So instead of 6 days, like you have to snatch a home off the market, you can take your time, which
Yeah.
is great. Yeah.
And the longer it waits, the more negotiating power.
Yeah, and then last stat for Snohomish County that I like to go over is the percent of original price. So what this means is if a house was listed for $1 million and let's say they did a price cut to like 950, this stat is going off of that $1 million, the initial list price. And so on average, homes are selling for 96.6% of the original list price. So that $1 million house sold for 966. So you can see, yes, there's a little bit of competition that we start seeing, come like February. That's the closings, right? So January, like I said, January is our frenzy time. So we do see a little bit of an uptick into the summer. And then we start seeing, these are good negotiating months for buyers. It upticks again. We barely went over 100% of list price earlier this year. And, right now, buyers, like, you can get a deal. This is what this stat is saying.
Does this account for like, say that $1 million listing, if they got 20,000 of seller credit,
No.
would it still go off that it would be 100% because of the million?
So it's
Okay.
literally just off of the purchase price. So we can see in the back end on the multiple listing service, like in the agent remarks, the agent only remarks like, hey, they got an X amount of credit. Appraisers like to see that so they can understand like, okay, was there a bit of negotiating power? So, I mean, we're supposed to, as listing agents, write in the credit amount that was given to the buyer. Do all agents do that? No. So, okay, I'm going to pop quickly over to King County. And sales price, average sales price is a touch over a million. You can see it was kind of at a peak at 1.16 back in June. Really low down in, the end of last year into like the start of the year, which is interesting. So King County is functioning quite a bit different, I would say, than Snohomish County. Snohomish County's been feeling a little bit more stable. Homes for sale. So there's a lot of homes for sale in King County right now. We're at 5,400. We had a low last year of about 1,900. That's a huge jump in
That's
the
a
amount of homes available. So, and I mean, you can see this is a 3-year span. This is still way more homes than we've seen on the market in King County. Okay, days on market. Right now, it's taking about 33 days for a home to get off the market in King County. But if we look at like month supply closed, King County is actually over 3 months. So for everything to get off the market right now, it's taking a little over 3 months to sell a home. We had that low back of about, a month, the end of last year. You can see like beginning of 2022, super low, zero point 0.3 months. Okay, and then last stat for King County, right now you can expect to pay about 97% of list price for a home. And you can see, it did uptick a little bit in April, but for the most part, like you can pretty much expect to pay about list price for a home in both counties. Yeah,
love it. I think it's optimistic for buyers.
absolutely.
And
Yeah, buyers, where are you?
yeah.
That's what I have to say because I'm so listing heavy right now. Like, I'm
Yeah.
like, what is this?
Yeah, I think that there's a lot of negotiating powers, and I was just talking to someone yesterday, and they're like, "Yeah, I think we're about 6 months out. We're just planners." I was like, and they kind of said something of like, "We're early," and I was like, "You're not that early." And I talked to them about, getting your ducks in a row ahead of time. Let's do the pre-approval now, and you can walk away from the pre-approval and say, I'm ready to go now, and you
Yep.
prepare. Or you can be like, oh, I gotta wait 6 months. Like, I gotta save a little bit more. I got a little credit. Like, or you just start a search and you have a search going and you can dip your toes into what it looks like for the market. So you can make a decision and you're ready and you're not seeing this beautiful, perfect home pop up on a Saturday at 8 p.m. and you're like, can I afford this? and you and I will jump on it and you'll show them, I'll run the numbers.
We'll get it done for you, but
We'll
is it
get it
going to be
done.
stressful for you?
But you're not going to
Absolutely.
understand all the numbers. I'm just going to say, this is your monthly payment, this is your cash, go, because you may have to move quick. Whereas this, we can take our time. I can answer questions. We can go through everything. And so that you understand the numbers, and what you're getting into.
Yeah, absolutely. Yeah. I mean, I think moral of the story is right now is like, if you're thinking you want to buy a house in quarter one, even quarter two, even quarter three next year, the best thing for you to do, like your call to action, is to connect with a local lender, connect with a local realtor. You're not signing anything, you're not giving away like your life rights or anything like that. But, having a conversation, and like I had one of my buyers, like she's not going to start looking for a home until December. And she actually got pre-approved back in May when we initially talked. And it gave her a really clear idea of, okay, this is what I can afford right now. And what's great is rates came down since then. So she can afford even more, which she was so excited about when we reconnected last week. So having like that clear picture of what now could look like, I think is so important so that when you are ready, you're so clear, you know exactly what you want to get into, you know what the numbers look like, it feels good to you. So we'll throw in the show notes, like obviously Danae's contact information, my contact information. There's never any obligation for you to, go
You
through
know,
with either of
a
us.
basic conversation and
Yep. It's just a conversation. Yep, yep. We're here to be a resource for you guys. You can DM us anytime, reach out to us anytime. Like we are here for you guys. We want this whole experience of buying and selling a home to be super transparent and comfortable feeling. So, all right.
Perfect. Well, we'll be back in a week or so with some more juicy content on specific topics. And as always, if anyone has any questions or suggestions, let us know.
We're all yours.
Okay.
All right.
Cheers.
Cheers.